Hello and welcome to another edition of Stock Watch on this Friday the 23rd of July. So we're just capping off the trading week today with news of other earnings season estimations that have succeeded and surpassed what analysts were expecting. Again, this comes in the form of AT&T and IBM. So AT&T, they did beat analyst expectations after exceeding paid subscriber numbers on their 5G network. The company also raised its full year revenue and adjusted earnings per share growth forecasts, added almost 1 million new postpaid phone subscribers during the quarter, and the analyst expectations was just under 300,000, so a very, very big jump on expectations there, which was quite notable in the share price as well. Looking back on last year, from this time last year, the company actually lost 150,000 subscribers at the height of the pandemic. So, very, very positive news for the company. And it's been shelling out billions of dollars to upgrade its 5G network as well, which a lot of other companies have been doing, because obviously it's the future and it's the way to go. We've had 3G, 4G, now 5G. So this is something that the company has really started bucking down on. So the total revenue rose to 7.6% to $44 billion, and this was beating analyst expectations of just under $43 billion as well. So Intel, as well as another company I just want to highlight, because they beat expectations as well. However, their share price did actually fall 2% upon the news, because it did say it's going to take a cautious approach to Q3 and having a guidance for margins in the next quarter as well. So that actually led shares to drop slightly, but it's not really something too worrying. So let's just take a look at the numbers for IBM. So earnings per share came in at $1.28 versus $1.06. And the revenue was $18.5 billion versus $17.8 billion. So that was quite significant as well. So let's just take a look at AT&T first of all. So the last time I looked at it, we had this merger going on with Discovery and Time Warner that AT&T was going to be a part of. But because AT&T was going to take on some of the debt of this new company, then that's why we saw quite a drop on share price. And and since then, you could say it's been in a pretty much descending channel. It has, it's failing to get out of this detrimental downturn, let's say, because it's the lowest we've seen since if we're going back, we can probably look back to November of last year that the share price was so low. So we're just looking to see to get a bounce to get out of this descending channel. We've done a medium regression now, so we'll probably have another test at the upside, roughly about the $28 to $29 area, and then we'll see if it's going to start moving down a little bit further. So let's just take a look on intraday as well for AT&T. Again, not really getting away from this big detrimental downturn that we saw on the 17th of May, and now we're just seeing if there's going to be any chance of moving higher in this degree here. Again, we are looking at the Ichimoku indicator for further guidance. We are trading vastly below it, so another test at the lower border would be hopefully expected for bulls, especially if you're a bear in the market, then it's looking more favorable. We're just waiting to see if it's going to break this $27.5 range. Nothing too much in the way of divergences on the RSI, so I'll just be looking at the headlines in the near term to see if we can get a little bit more of an upside. And let's just look on IBM as well. So again, just seeing what the possibilities are for, so I said IBM, I mean Intel. Just look at the possibilities for Intel, and as I said, shares did drop by 2%, but most significantly, we're just seeing this border of the Ichimoku cloud failing to be penetrated. So we're just hoping that these three positive daily candles can really start spurring on a move to the upside. We've seen this candle here end on a low note, but we're hoping that's just a small doji and we're going to start moving higher in the medium term. So just something to look out for there as well. And on the intraday chart, I've got this on the 4-hour chart again. As I said, we're having a bit of a progressive upside move. We're just waiting to see if we're going to penetrate this this Ichimoku border. The cloud is quite thin, which indicates that it's not very resistant at the moment. You know, if you've got a big border here, then it means that there's a lot to be done. But here it's very thin, so there is a good chance that we could actually go through the border and get more upside. Again, not too much in the way of divergences on the RSI. I was hoping that would get more of a bullish divergence here, but prices did dip below the previous lows that we had, and now we're probably looking at the other lows that we had previously in May. So just a few things to look out for. Obviously the earnings season is still going, so keep an eye out for other stocks that do have potentials as well. So that's all from the Stock Watch today. Thank you very much for joining me. As usual, any comments or queries, add them to the post and I'll get back to you as soon as possible. So have a great trading day ahead and bye for now.